Would like to welcome all of you to Keiretsu Forum Presents. I'm Adam Henderson, COO, Director of International for Keiretsu Forum. Many of you know Keiretsu Forum, but some of you don't. Keiretsu Forum is a large early stage investment network where we have a footprint across the globe. We have 53 chapters in 23 countries, and we're excited to be here today. I have a wonderful guest with us, Jeff LaBrot. We're going to be talking about public venture capital. And so that term may be new to some of you. It's new to me. It's not new to Jeff, but Jeff LaBrot, welcome. He's currently VP of Capital for TMX Group. And Jeff, why don't you tell us about TMX Group and tell us about yourself. Welcome.
Great, thanks Adam. Thanks for having me. So as you said, I'm Jeff LaBrot, VP of Capital Formation with TMX Group. TMX Group is the parent company that owns the Toronto Stock Exchange and the TSX Venture Exchange. My role as VP Capital Formation in the US is to work with US companies to list either on the big board of the Toronto Stock Exchange or on the junior regulated market, which is the TSX Venture Exchange. Prior to that, I worked for NASDAQ for a number of years. I was the IPO director in Silicon Valley, working with really all stage companies. Our goal there was to meet with companies at least 2 years away from their IPO and work with them throughout their listing process. And then most of my career I spent really on the sell side of equity capital markets with various investment banks.
Oh, wonderful. So, perfect credentials for our topic today. Before we dig into the meaning of public venture capital, normally in the Valley here in our universe, it's private venture capital, but we're going to talk about public venture capital. Before we go there, let's talk a little bit about who and what companies are sort of taking advantage of public venture capital, and step back a little bit. And can you talk about the landscape right now in your view for those companies who would be searching for both venture capital and public venture capital?
Yeah, so the landscape right now is I think one of the driving factors for public venture capital, and the main reason behind that is because the average life of a private company is approximately 12 years now. Looking back 10 years, it was about half that. So companies stayed private about 6 years from inception to some kind of an exit, whether it was an M&A transaction or an IPO. Now it's 12 years. So you have this big gap, and it's probably 90+% of companies are in this gap that have done various rounds of financing, and then they're what a lot of them have termed to me, they're kind of in this trough of not getting any funding and having to leverage the money they have. Many founders call it a desert sometimes because it can be dry and long period of time before this exit. So companies now, one of the things about the traditional model, which is going the venture capital route, through all series of funding rounds and then an eventual IPO or M&A. But companies now, I think, find that the terms sometimes for those various VC rounds are such that they lose a lot of control of their company. By the third, fourth, fifth round, suddenly they see that they own less than what they want to own of their company and have less control of it because of venture capitalists wanting board seats and providing direction for the company, which is very positive in a lot of times. But for those companies that don't want that, but still need access to growth capital, there is this alternate source of funding, which is the TSX Venture Exchange. And on the Venture Exchange, any US company, you don't have to have any operations in Canada or be headquartered in Canada or anything like that. You can just choose to go public on the TSX Venture Exchange, and it's really well suited for early stage companies, again, for that growth capital. So typically we see companies with an average market cap of probably 20 million is about the average market cap on the TSX Venture Exchange. but it's a fully regulated market. It's has a ecosystem that's built out, so it provides easy graduation up to the big board, which is the TSX, and or dual listing onto NASDAQ or NYC. So again, it's going public, reporting this, having the same attributes of a public company, reporting 4 times a year, having all the same benefits, which are, having capital for currency for M&A transactions, having capital to retain and attract talent, having liquidity options for your employees or shareholders, having that capital currency for expansion, and also just the credibility that goes along with being a public company and on a fully regulated exchange like the TSX Venture Exchange.
Well, that's fascinating. I mean, when we first met and we were talking about this, one, just the term public venture capital was somewhat new, as we're private venture capital. And as we started to break this down, I was, realizing, wow. And back to your point about the regulatory parts. The regulatory parts does bring a credibility, as we know that those financial statements and those things have gone through a process of review that we can better rely on than some just private company that hasn't had that audit process. But what surprised me was, and maybe dig into this a little bit more, there's no restriction for a US-based company to list and be on the Canadian Stock Exchange. And so can you talk about that?
Sure. Yeah, no, as I mentioned, there are no restrictions at all. You don't have to have any operations, you don't have to have any customers, you don't have to have any affiliation with government or anything in Canada. You can be domiciled here in the United States and just be listed up there on the exchange. Typically, you do need to have an advisory committee that knows the rules and regulations of Canada. So have a good Canadian lawyer. Most companies that they're US based that are listed on the TSX or TSX Venture Exchange have Canadian lawyers and US lawyers, but just somebody who knows the Canadian system well. You do need Canadian bankers, because Canadian bankers, you have to apply for a license to issue securities in Canada with the Canadian government. So you have to be licensed in Canada, so you need Canadian bankers in order to actually go public on the exchange. But those are really the only qualifications of listing, and you have to report everything to the Canadian government. Okay. But it's very similar to SEC reporting regulations.
Well, it's interesting. You have experience with the NASDAQ, having worked there. And I'll take us back to a comment you had, which was really relevant. There are some great companies out there that end up in a venture funding cycle, and then pretty soon they're not as in favor. The fund itself they might have been in has substantially liquidated. They may be left sitting in that fund in sort of what you call the sort of desert space. And that apply. I mean, we see companies in Keiretsu Forum that come through that are really great companies, and the private marketplace for funding has really started to grow and change. Our market, we were a seed angel group substantially, and we still have our roots in there. But because of these funding cycles that have happened, where companies are staying private longer, they're further down the funding food chain, so we've moved with them. We're doing a lot less seed and angel, and we're much more early and late stage. And so if I'm one of those companies and I'm in that gray ground, what kind of coaching could you give me for the TSX venture, and what might I expect in terms of that process, and then maybe talk about the cost?
Sure. Yeah, that's a very good point. So one of the kind of criteria that we look at for companies that we feel would be a good match for the TSX Venture Exchange, because I certainly don't pretend that it's right for every U.S. company, but I think for the companies that have maybe lost favor with the venture capital firms, for one reason or another, maybe their growth is slowed from 2,000% down to 50%, but for whatever reason, they can't or find it difficult to get VC funding. So again, come up list on the venture exchange, you have a much larger access to public pools of capital from a international investor base, and so it's kind of the steps involved in doing that are first and foremost, I would say, talk with a Canadian lawyer, find out, and there are many lawyers that I refer people to just have an initial conversation, to feel it out, find out if it's the right structure for the U.S. company. And they act as advisors in that capacity a lot of times. And so talk with a good law firm, and then talk with some bankers. Get a feel of the markets up there. Find out if your particular company will get the multiple that you're looking for in the banking system up there. But really get a sense of if there is a match both ways. Because it has to be that way. Otherwise, neither one's gonna be happy. Right. But then, once you are listed, the costs are, and this is one of the significant benefits as well of listing on the TSX or TSX Venture, is the costs are probably about 1/8 of the cost of listing here in the U.S. Kind of a figure that we typically throw out. We don't throw it out, but one of the figures that I talk about a lot is the all-in cost for year one of listing a venture on a U.S. market, and that's about $1.5 million, kind of all in is the figure that I've been quoted a lot of times, and bankers tell me in Canada that same, apples to apples, that same figure is about $300 to $400 Canadian dollars. Okay. So then you take a haircut on that because of the
exchange rate.
Exchange rate, yeah, right. which is pretty significant at this point.
Right.
But just from so right there you have a all-in discount of about 1/3.
Right.
But just from an exchange standpoint, the fees are so much cheaper. From the initial listing fee on the TSX Venture for a $20 million company is about $35,000, and then the ongoing annual fee is about $15,000. Whereas here in the U.S., initial listing fee is about $250, and then for a larger company, but $250, and then ongoing fees of substantially higher than that.
Right. Right.
And then on the venture or the TSX, I'm sorry, it's for a 200 million market cap company, the initial listing fee is approximately $200,000, and then the ongoing annual fee is approximately $35,000. So again, a lot cheaper than the exchange fees charged here. Wow,
very, very interesting. And you mentioned something too, the international capital base that's up there, and we have a chapter in Canada, and we have wonderful chapter presidents up there, Ozan and Kevin, and we're in Vancouver and Toronto, and we do see the activity. And then what we see, being an international organization, we see tremendous international influence in there. And how has the TSX and TSX Venture benefited from that international change in Canada?
Yeah, well, it's the international influence has certainly played a big part, but I would say, even going back just to how the whole ecosystem was built out to set up the TSX Venture Exchange and the kind of two-tiered market structure of TSX and TSX Venture, the much larger retail base of investors in Canada versus the United States, and they are really hungry. Yeah, it is interesting. It comprises about 25% of all trading in Canada is from the retail base, much different than here in the U.S. But so that retail base is very hungry for venture companies. You look at the smaller companies on the other exchanges here in the U.S. and typically on the much smaller companies, much more largely owned by a retail base. So I don't want to say that the retail base is all focused on smaller companies, but there's an appetite there created for the ecosystem for the TSX Venture, and also just that graduation. So in the last 8 years from 2001, there's been 650 companies that have graduated from the TSX Venture up to the TSX Big Board.
Wow, that's fantastic.
And currently, 40% of the S&P TSX, which is the S&P
version
of the TSX, approximately 40% of those are venture graduates. So again, really good ecosystem that's built in for these companies to get public funding for growth and then grow it up to a size where they can do what they want with it. But back to your point, so the international trading that is injected there really helps create that ecosystem and helps fund that ecosystem. Approximately, not to throw out too many stats, but approximately 40% of all trading volume on the TSX is international funds.
Wow.
So it really is, if you list up there, you have an international investor base.
So, and when I hear this, and I'm thinking, and I'm a company, and we have the universe of companies that are in the space that we're talking about, the unlisted private companies, and those can be technology, real estate, mining, right? Mm-hmm. Talk about that. I mean, I think of Canada, and the international influence, of course, I see the technology developing and changing, but kind of the fundamental resource companies and basic industries, we fund those companies also. Consumer products, life science, real estate, we fund those companies in our network, and it sounds like that might be a fit into what you have in Canada.
Well, certainly the TSX and the TSX Venture Exchange are most well known for mining, right, and resources. I mean, that's typically, that's how the TSX started, and that's how actually the Venture Exchange started as well. These mining companies, these little tiny guys that wanted to go out and start a mine needed funding, right. So they publicly listed on the TSX Venture Exchange. But now that has really shifted, and it's been driven again by the appetite from the investors. So they're wanting more technology companies, and consequently, the bankers are out finding those companies. And one of the ways that we should talk about, it's interesting that is dynamic of the Canadian markets is the various ways to list. So there's, on the TSX Venture Exchange, there's the typical IPO, which is just a straight IPO where you get investment banks and you do the roadshow, and 2 weeks later, hopefully you're a public company. But really the main way that companies take advantage of to become a public company on the TSX Venture is through a CPC, and that's a capital pool company. Oh. And what that is essentially it's a I don't like using the term shell, but it's a publicly listed shell that's usually funded with a couple $1 million. They go out and do what's called a qualifying transaction. So they go out, it's usually a group of bankers or have company executives that have experience running companies. Yeah. And they go out and find one of these qualifying transactions, do the transaction, and then at the same time do another capital raise. So boom, all of a sudden you're a target of that CPC, you get bought, and you're a public company. And so the speed to market to IPO is very quick in that scenario, and very cheap in that scenario as well.
Wow, very, very interesting. And so if there's a company down here, and the beauty is we've gotten to know you in our network, and now you're here, we're doing some things together. And besides those bankers and lawyers that we might need to reach out into Canada if we're a company wanting to list, you're a resource as well, right? You're in the Bay Area, you've been here, you have a history here. Tell us about companies that are interested in this process. What do they? Where should they start? Can they start with a Canadian Economic and Trade Office in San Francisco, and they come to you, and tell us how a company goes about that?
Well, thanks for the plug there, the offer of a plug. So yeah, so it's my role here in the U.S. is to work exclusively with U.S. companies to list in Canada. So there's what you would do typically if you're a company that thinks this may be a good option for you. Number one, I would say check out our website. We actually just created a U.S. specific website for companies. It's us.tsx.com. That will tell you everything you should need to know about the listing process and all the statistics that I probably got wrong in this conversation, but
they were good ones.
it'll help with that.
Yeah.
But then, and absolutely has my contact information on that. So absolutely contact me. Sometimes I feel like I'm doing the due diligence for some of these bankers in Canada. Mm-hmm. I'm boots on the ground here, out meeting constantly with founders and executives and working with startups and great organizations like Keiretsu, and so I am boots on the ground meeting with a ton of people. And so what I do is when I see a company that I feel is right and that is interested in exploring that option, I usually introduce them to either an advisor or a law firm first, as I mentioned earlier. Okay. And then we'll kind of go from there after we decide what is the best way to do it.
Right. Well, and I bring this up and ends up being a bit of a plug for you, but part of our goal really in Keiretsu Forum is really we're beyond capital, as you know, getting to know us. Our goal is to be in a position really to help the entrepreneurial ecosystem and bring resources to the table and things like today that I'm learning about and a lot of the companies here, and I know many people don't know about the opportunity to pursue public venture capital and go up to Canada as a U.S.-based company with really without much friction. And that's what's been really fascinating to me to hear. And so when we think of that ecosystem of companies, and our goal is bring resources, help them, that's capital, connections, all these pieces. And when we're trying to do that, for them, we're finding these avenues of liquidity, capital raise. And so you being in this space as well and working with young early stage companies, late stage companies, going public, looking for capital, let's talk a little bit about that universe right now. Dig a little more into that world we talked about in the beginning and how it's changing, and what you see in this system. We're seeing the secondaries now. We're seeing companies now, and it's we see the unicorns out there that will trade pre-IPO in the secondary universe, but really below the unicorns are many other companies. And maybe just briefly talk about what you think that universe is going to be and how what's available to companies now in, for example, the TSX and those exchanges and other exchanges, and what that universe looks like.
Sure. Well, first of all, I think that the private market space has a potential to be a fantastic market. I think it needs more transparency and needs more liquidity. I know you all are working on that and doing a really good job with that.
Yep.
But predominantly what I've seen are the unicorns that really make up most of those private transactions. So it's the companies that are the ones that have gotten $10, $15 million in funding and are still growing solidly, but need more capital and they just can't get it, and unfortunately they're just dying on the vine. And that happens to so many companies. I've seen it throughout my career, and it's sad. It's a shame because they're good companies that unfortunately just can't sustain with the current capital they have. So I think that I think that the private market space, I think once that matures, I think that really will help the private companies stay private longer. But I think you still need an option for these much smaller companies that really need more funding, not just the liquidity, because you get some liquidity, on the TSX Venture Exchange, but of the probably 10 benefits that I could list, I would put that at number 8 or so. But certainly that access to public venture capital and at a market rate. So it's at a market rate and when you need it.
Right, right. Well, that's terrific. And what we're in a phase here where in the early stage investing world, we see now, the head of the New York Stock Exchange and the SEC are talking about, figuring out regulatory requirements, and it's already really in place now, but the universe for accredited investors to be able to actually play in this private space, pre-IPO space, is really changing and growing. We're seeing that our focus in a lot of our companies is talking about exiting and finding liquidity. And liquidity's been a big term, and often in early stage investing, liquidity is way down the road. We're fortunately finding new avenues for these types of events to happen, and for us to be able to share your opportunity and what you provide with the TSX Venture in particular for the stage companies we're in, who then can also move to the TSX Big Board. What a great place for them to be able to consider, and for us to know this universe existed, and with our 3,000 accredited investors and 1,400 fundings, and even as you've seen in our technology platform, we have 700 or 800 companies on it all across the globe. We're hoping that they have that opportunity to be able to access capital and find a place to go and now get public venture capital, and even those investors then find a little bit of liquidity. And so we are grateful to have you here. And in closing, is there anything that you can share, the wisdom that you have from what you've done for our entrepreneurial ecosystem?
Well, again, thanks for having me. I really appreciate that.
Wonderful to have you.
I think that probably 80% of my job, and I've looked at this for a while now, 80% of my job of working for TMS Group is really just getting out there and educating people that this exists. Because honestly, I spent my entire career in the capital markets, but I didn't know to the extent this existed and this alternate source of funding was available to companies. So just educating is tremendous.
Well, we thank you for your education today. It was wonderful. And thank all of you for being a part of Keiretsu Forum Presents, and we look forward to seeing you on our next show. Thanks for your time.
Thank you.